The value of the virtual currency Bitcoin has plunged over the last 24 hours, creating some concern around Bitcoin's longevity and legitimacy. But that's not stopping a Manhattan business from debuting Bitcoin as an acceptable form of payment. Street Smart anchors Adam Johnson and Trish Regan went to check it out on opening night.
It's an unprecedented move.
We're suddenly going to take Bitcoin at a bar so we can pay for our drinks with Bitcoin?
Not only that, but we can have guests from anywhere in the whole world. If they have Bitcoins, they can spend it here.
Charlie Shrem is an entrepreneur who understands the meaning of synergy.
As a partner at Midtown Bar Ever and CEO of Bitcoin exchange BitInstant, this week Charlie decided to put his two passions together. Ever's the first bar in New York to accept Bitcoin as payment, and it's actually saving him money.
Anyone who's paying with Bitcoin, we're making more money on that transaction than if we were going to use their credit card, because instead of paying that credit card transaction fee, we're paying a fraction of that fee for the Bitcoin transaction.
So your margins are better as a restaurant.
The move isn't just about reducing costs. It's about helping the digital currency break into the real world.
Do you think that Bitcoin could become more relevant than Western Union?
That's where Bitcoin will find its first entrance into mainstream, is the remittance market.
So how do you bring Bitcoin out of the digital realm and into the cash register? The answer, tablets.
Type in $50, click the button, check out now. It'll generate a nice big QR code, like a barcode, and a Bitcoin address. Anyone with a mobile phone that has a Bitcoin wallet on there, scan it just like that, click confirm payment, and that's it.
It's instant, anonymous, and most importantly for Charlie, irreversible.
So when we're accepting Bitcoin, I don't have to worry about a guy who was drunk the night before, who popped 15 bottles of champagne, coming back and charging back his credit card. Sorry.
Right.
You sent the Bitcoin.
The transaction already happened.
Done.
For Bitcoin evangelists, it's not about convenience, it's about the theory of money itself.
There is no central bank issuing new currency or inflating the currency every single day.
And whether it's an anarchist currency, a bubble waiting to burst, or a legitimate alternative to cash, the competition for Bitcoin business is on.
So look, it's a new market. It's only 4 years old. You'll see like all different Bitcoin companies, even competitors, that will decide like straight off the bat, let's not fight over the small pie that we have now. Let's all work together, grow the pie, and then we'll compete later.
That was Street Smart's Trish Regan and Adam Johnson. So, Bitcoins can now be used to buy drinks in one bar in New York City. But where does the virtual currency come from? For more on that, let's head back over to my partner, Corey Johnson. It is such a fascinating story, Corey, about how this all started.
It really is. It's cool. So it started back in 2009 when an unknown programmer, or maybe a group of programmers, no one really knows, they created a foundation of Bitcoins. The foundation was a mathematical sequence that would have to get a particular reaction from another mathematical sequence. Each one would be a coin. So the transaction of these Bitcoins would be over a peer-to-peer network with no central government, bank, or anything else controlling it from there. Bitcoin took off until maybe yesterday. Yesterday, the value tanked 46% overnight, according to the Mt. Gox website. But how did that happen? Joining us to talk about this is Jared Kennett, CEO of TradeHill, one of the first Bitcoin exchanges to open in America. First of all, talk to me about the pricing, because that seemed to really catch anything that can move in price of 46%, which would be hundreds of millions of dollars. Did that happen in your network as well? Did you see this network-wide?
Definitely. Bitcoin's traditionally been very volatile as far as currency.
46% overnight? That's incredible.
Quite a bit. When I first got into it, it was 6 cents. I bought a bunch at 20 cents. And then we saw it creep up to $1, reach dollar parity. And then in July of 2011, it hit $31. And then from there, it went back down to about $2.
When I try to explain what Bitcoin is, and I can't, but I try to use the notion of the minting of the coins, of course, is so important, and the scarcity value. I think of it like prime numbers, where the first prime numbers were easy to get to. But as they got bigger and bigger, it's harder and harder, and therefore the computing power, the possibility of mining them becomes much more difficult. Is that the right kind of?
That's a fair comparison. It's more based on the amount of people that are doing it and the amount of power that's going into it. The protocol actually controls it. So if more people mine and more power is put into mining, it'll become more difficult to balance it out. And then if people start moving away from Bitcoin, it'll become easier to encourage people to mine more.
I've also read the suggestion that Bitcoin, because it's government-free, it's untraceable, that it's going to naturally gravitate towards those pieces of commerce that want to be government-free and untraceable. That is, drug dealing, I don't know, child porn, whatever kind of things. Is that the fundamental nature of this, or at least was it the first growth in the usage of Bitcoin?
I mean, I think you're going to see a lot of areas like, adult entertainment where it's nice to have the pseudonymous nature of it, which is like, people like PayPal for that reason too. You don't have to reveal your banking information or anything like that. You don't have to reveal a credit card number that someone can steal. I think in some ways it's actually a lot easier to track than cash. I mean, with cash, yeah, there's a serial number on there, but nobody follows that. With Bitcoins, there's some breadcrumbs. There's a trail for investigators to look at. So in some ways, it's actually a lot more transparent than cash.
Talk to me about the volume that you've seen and how that's changed over time. I wonder if an event like yesterday is people running for the exits, or if it's quite the opposite, where you've got people actually coming in and buying even more, recognizing it as maybe an opportunity.
Right. So, I mean, over the last couple of months, we've seen a lot more professional investors. Like my company, TradeHill, we're getting a lot of people that are calling up and they're saying, hey, I'm a professional investor out of New York. I want to get into this. I've heard about it. A lot of the VC community is really get into it. Originally, they were just kind of, they were looking at it and they're saying, should I invest in Bitcoin or not? Should I invest in Bitcoin companies? Now they're saying, which companies should I put my money into? So you're seeing a lot of professional traders, a lot of institutions, a lot of the VC community actually sinking their money into it, which is causing the price to rise a lot.
But it's a pure economic instrument, right?
Right.
I mean, I've read this compared to gold because it has no actual functional value, but merely the value someone else will pay for. But gold actually can be made into jewelry. Bitcoin,
right.
Not so much.
That's true, but I mean, there's plenty of things that don't have much of a real use that have a value. If you have a Picasso painting and somebody wants to pay $20 million for it, it's worth $20 million. And Bitcoin is the same way. It's supply and demand. There's not anything backing it like there is, gold. There's not a physical, tangible object. But the fact that someone's willing to pay for it and someone's willing to pay a little bit more than them rises the price up. If everybody wants to sell it, the price will go down.
So I understand the speculators are changing from individuals to people with more money, professional investors, maybe even funds.
Right.
But what about the usage case? How has that changed over the course of the last 6 months?
So I think a lot of people are starting to use it for international remittance. For example, I paid a developer in the UK in Bitcoins. I sent it to him. It took less than an hour. He lost about 2% in the transaction. The bank was going to take 8%, 3 to 5 days, and then charge me $35 on top of that. Also, there's a company called BitPay. BitPay has something between 3,000 merchants, I believe, that people can actually buy things with Bitcoins. For example, WordPress now accepts Bitcoin. Reddit accepts Bitcoin. So there's a lot of real-world goods and services that are being added to the Bitcoin ecosystem.
Digital economy going to an entirely different level. Who would have thunk it? Jared, thank you very much. Jared Kenna, the CEO of TradeHill. Emily?